Meta is currently sitting at $632.51. Over the course of the day, it would be down 0.44%. This is recorded on Saturday night, so that would have been Friday afternoon. Over the past 5 days, it is up 3.71%. Over the past month, it's up 3.37%. Over the past 6 months, it's down 1.3%. Year to date, it is down 4.18%. On a 1 year chart, it is down 2.31%. On a 5 year chart, it's down 92. Oh my gosh. On a 5 year chart, it's up 92.41%. On a maximum chart, it is up 1,554.49%. My goodness. Meta has a dividend of 0.33%. That's 52 cents a quarter. They have a PE ratio of 22.99. A 52-week high of $796.25. 52-week low of $520.26. With an EPS of $27.52 and about 2.20 billion shares outstanding. They got about 78,000 employees and a market cap of $1.61 trillion. Let's check out their earnings. So, Meta reported on April 29th, 2026. They beat on EPS by 7.2%. They were predicted to get $6.82. They got $7.31. They also beat on revenue by 1.36%. They were predicted to get $55.56 billion. They got $56.31 billion. Very cool. All right. We'll read some of the little overview here. Meta surpasses EPS and revenue estimates. Meta reported a significant beat with a diluted EPS of $10.44 and revenue of $56.31. Revenue of $56.31 billion compared to the estimated $6.82 EPS and $55.56 billion in revenue. The earnings figure includes a one-time $8.03 billion income tax benefit. Excluding this, the adjusted EPS of $7.31 still outperformed the forecasted results. Aggressive AI CapEx guidance raised. Meta raised its full year 2026 CapEx expenditure guidance to a range of $125 billion to $145 billion, up from the previous estimate of $115 billion to $135 billion. Management attributed this increase to a higher component costs and the accelerated build-out of AI infrastructure following the launch of its first model from Meta Superintelligence Labs. Reality Labs and WhatsApp momentum. Reality Labs revenue slightly declined by 2% year over year to $402 million due to lower Quest headset sales, though daily AI glasses users tripled during the period. Meanwhile, WhatsApp helped drive a 74% increase in the other revenue category through strong performance in paid messaging and subscriptions. Oh, here we go. We'll go down and see when the last time that they missed was, if it's on here. They haven't missed. I knew they hadn't. So, yeah, I mean, they beat. Meta usually beats. So going back all the way to Q2 of 2023, they beat every single time on both metrics. A lot of times, some double-digit beats, single-digit beats, but beats nonetheless. Very nice. Meta. So, let's compare. So, Google has a slightly higher PE ratio, I think. Yeah, a little higher. At 28.72. Has less of a dividend. Bigger market cap. So that's pretty cool. I'm doing Nvidia too. Just to kind of see some stocks that are like big, huge stocks. You know what I mean? I think Nvidia is still the #1 biggest stock in the world. So Nvidia pays less of a dividend at 0.47%. And that's 25 cents. Their PE ratio is higher. And the market cap's way higher, 5.11 trillion. Fascinating. We'll do Microsoft too. Microsoft. So there's Meta. They got the 22.99 PE ratio. 52-cent dividend. These guys have a 26.82, so much closer, $3.34 trillion market cap, and a 91-cent dividend. That's Microsoft there. So just to kind of some little comparisons, let's do this. How does Meta make its money? Answer in one paragraph. We'll ask our friend Gemini here. That off the screen, man. What is that? Meta makes the vast majority of its money, roughly 98% of its total revenue, by selling highly targeted digital advertisements across its family of apps, which includes Facebook, Instagram, Messenger, and WhatsApp. Because billions of people use these platforms daily, Meta can collect vast amounts of data on user demographics, interests, and behaviors, and it uses advanced artificial intelligence to help businesses deliver hyper-precise ads to the exact audiences most likely to buy their products. The remaining slice of its revenue comes from its Reality Labs division, which sells consumer hardware like Meta Quest virtual reality headsets and Ray-Ban Meta smart glasses, alongside smaller revenue streams from business messaging tools and paid verification subscriptions. Fascinating. There he is. Mark Zuckerberg, you guys know him. Y'all know, everybody knows him and everybody loves him. This is the new Mark Zuckerberg with the little broccoli cut. New MMA style Mark Zuckerberg. So, we know this guy. It's not too much. We're not going to dive too deep into this. Zuckerberg briefly attended Harvard and launched Facebook there in February 2004 with his roommates Eduardo Severin, Andrew McCullum, Dustin Moskovitz, and Chris Hughes. Zuckerberg took the company public in May 2012 with majority shares. He became the world's youngest self-made billionaire in 2008 at age 23 and has consistently ranked among the world's wealthiest people. According to Forbes, Zuckerberg's estimated net worth stood at $220 billion as of December 2025. Fascinating. Here we go. The Motley Fool. One thing investors should know about Meta's new subscription strategy. This is by The Motley Fool, by Katie Hogan. Investors are increasingly anxious about the heavy CapEx required for artificial intelligence infrastructure, and rightfully so. It's estimated that among tech giants, AI CapEx will reach $765 billion this year and grow to $1.6 trillion by 2031. Meta is trying to calm those nerves by launching Meta One, a tiered subscription program specifically geared toward creators and businesses that frequently use Meta AI. The move is a significant shift toward recurring revenue streams for the social media company. Okay. One thing investors should know about this subscription strategy is that Meta is betting this will help offset hundreds of billions of dollars in planned artificial intelligence investments. Still, the math is daunting. Meta raised its full year 2026 CapEx guidance to an astounding $125 billion to $145 billion. Revenue from Meta One could range from $4 billion to $12 billion, depending on which subscription plan users prefer. While the revenue is meaningful, it will take years to really move the needle compared to what the company plans to spend. Analysts from JP Morgan downgraded Meta to neutral due to its spending. Yes, Meta One is a smart strategy to diversify revenue, but don't expect it to fully cease pressure on the balance sheet or investor sentiment anytime soon. Meta stock has stumbled so far this year, down more than 3% since January. Among the Magnificent Seven stocks, only Microsoft has underperformed Meta year to date. If the company's AI investments prove worthwhile, the stock is arguably trading at a very reasonable price for investors with a long-term horizon. Ads on ads on ads. Is Meta Platforms a long-term buy right now? This is according to the Motley Fool, not according to your cousin Dustin. Is Meta Platforms a long-term buy right now? Before you buy stock in Meta Platforms, consider this. The Motley Fool Stock Advisor Analyst team just identified what they believe are the 10 best stocks for investors to buy now, and Meta Platforms wasn't one of them. Okay. Consider when Netflix made this list on December 17th, 2004. If you invested $1,000 at the same time of our recommendation, you'd have $463,900. Or when Nvidia made this list on April 15th, 2005, if you invested $1,000 at the time of our recommendation, you'd have $1,294,401. Interesting. So, they don't like Meta that much right now. Fascinating. Hey, what the heck? What the heck is going on? So there you have it. That's Meta. You know, you got CEO Mark Zuckerberg over there. You know, they got a 22.99% or 22.99 PE ratio. And I don't know. What do you guys think? Let me know in the comments. It's your cousin Dustin. Like and subscribe. Likey, subscribey. Thank you guys.